Hi, thanks so much for joining in. You're watching NDTV Profit. My name is Alex Mathew and this is Ask Profit. Like the name suggests, this show is geared towards answering all of your stock-related questions. And to that end, the number that you see at the bottom of your screen, that's where you send your questions to us. Do remember, if you're writing in for the first time, to tell us your name and where you're tuning in from. It'll help you identify when we take your questions up. Before we get to that though, let's take a look at how the markets are faring right now. And as I look at my screen, it's narrow gains, and that seems to have been the trend over the course of the last couple of weeks. It's another day of gains, and if we do hold on to gains today, it will in fact be the 13th straight session of gains for the Nifty 50. It has slowly and steadily moved upwards. It has gained over 1,000 points over the last 14 days or so, and it is now trading very comfortably above 25,300, having hit an all-time high yet again in trade today. The broader markets are not doing too much at this juncture, and in fact you have the mid-cap index that is down about 1/3% or so, and you have the small-cap index that's up about just about 1/10%. I was looking at the advanced decline ratio, and that is also pointing to a bit of a mixed bag. In fact, it's even Stevens in terms of advances and declines, more declines at this juncture just about at this point compared with the advances. In terms of the sectors that are currently moving, you have the key outperformers in the form of FMCG as well as the finance pack, which is gaining in trade today. Not too much to speak of though, gains of about 0.4% for the IT space as well, and that has been a sector that has been in focus. The losers are the metal index, which is down about 0.6%. You have auto that's down about 0.6% as well. And auto has been a talking point. In fact, a number of these stocks have been in focus. The likes of Tata Motors losing ground among the top underperformers on the Nifty 50. You have Mahindra & Mahindra, which was better than expected in terms of volumes, but by and large, you've had the auto pack that have underperformed in terms of the volume picture for the month of August. And you have Tata Motors, Ashok Leyland, Mahindra & Mahindra, Bosch, all of them indicating that bit of negativity when it comes to the sales that have come through. Now, one of the big talking points in corporate India at the start of the new trading week is in fact the story about Gujarat Gas. The boards of Gujarat Gas and Gujarat State Petronet have announced a scheme of arrangement that will consolidate the government of Gujarat's energy business held via various companies. This will result in two entities post the transaction. And in fact, both of these entities, particularly Gujarat Gas, has been buzzing on the back of it. This is in order to create value for shareholders and in order to simplify the structure. What is the structure about and what are the implications? We're talking about that at the start today. Mika is joining in to tell you more. Mika, first the structure and then we'll talk about valuations.
Let's talk about, the scheme of arrangement and focus. Now, first part of it is Gujarat State Petroleum Corporation, Gujarat State Petronet and GSPC Energy will merge into Gujarat Gas, and then the transmission business will be carved out and listed separately. So thereby, two companies have to be resultant. Gujarat Gas will then carry out the city gas distribution business, the gas trading business and exploration and production, while the GSPL transmission business will hand out the transmission side of things. In terms of the share exchange ratio, the merger of JSPC into Gujarat Gas, 10 shares of Gujarat Gas will be issued for every 305 shares held. For GSPL, Gujarat Gas will issue 10 shares for every 13 shares held. And for the demerger of the transmission business, 1 share of the new entity will be given for every 3 shares held in Gujarat Gas. So in total, Gujarat Gas will issue 78.66 crore shares. But out of this, over 53 crore shares will be extinguished because all of these companies have stakes in each other. And the timeline is expected to be completed by July to August of 2025.
Okay, Mika, the big question that shareholders are asking, and some of them have gotten that answer since morning, what is the valuation suggesting, and does it in fact actually unlock value?
Yeah, the valuations are fairly priced. Now, Gujarat State Petronet's company is valued around 26,000 crores, but the core business is only valued at 3,500 crores, and the rest is in investments. For Gujarat State Petroleum, the company is valued around 21,000 crores, and the implied EV to EBITDA multiple is at 6.8 times, which is lower than the industry average, actually. In terms of brokerages, they're fairly mixed. Now, Jefferies, which still maintains an underperform rating, says that the integration of the gas trading businesses will improve Gujarat Gas's margin profile, but it also increases the company for earnings volatility. MK also has a reduced rating on the stock, but they do see value for Gujarat State Petronet shareholders as they see a 5% upside, and they also expect the merger to imply 50% of EPS accretion for Gujarat Gas.
Fair point. All right. Thanks, Amika, for getting us those details. Let's talk about this at the start. In fact, let me get the experts on board. We've got Sameer Dalal of Netverlal and Sons Stockbrokers, as well as Rajesh Palvia, who's the Senior Vice President, Technical and Derivatives Research at Access Securities. Gentlemen, thanks so much for taking the time. Sameer, I'll start with you. What do you make of the deal? And in fact, you've already seen a big run-up in Gujarat Gas. Is it still a buy at this point?
So honestly, we don't have coverage on GSPL, but Gujarat Gas, we do have coverage, and we're very bullish on the city gas distributors across the board, be it MGL, IGL, Gujarat Gas, for the simple reason that we believe that over time, you're going to see more acceleration of city gas distribution. You're going to see the CNG variants see more uptake. And as CNG scooters like Bajaj has launched and the cars keep continuing to see traction, I think the demand from there will also keep growing. So the profitability as the volumes grow, you see operating leverage come through, and you see profitability continuing to grow and ROEs remaining healthy. So we were quite positive on that. Now, I haven't studied exactly the details of the merger, so very difficult for me to tell. We did believe that Gujarat Gas was fairly priced for the near term, but over a long term, there was a good opportunity. So this run-up obviously reduces the upside over the longer term. But yes, any correction in Gujarat Gas would be something interesting to buy at. But like I said, I haven't studied the details of the merger. So, I don't know how the merger is going to play out and how it's going to impact the overall situation.
Okay, fair point. It's time to jump into the queries, and we've got quite a few that have already come through. I would like to reiterate, if you're tuning in right now, the number that you see at the bottom of your screen, that's where you send all of your questions to us. And if you are writing in for the first time, do remember to tell us your name as well as the location that you're tuning in from. The first question we're taking today is from Narendra. He's writing in from Hyderabad, and he's asking about Tata Technologies, which he's bought at an average price of 1,000 rupees per share. And he's looking at accumulating this more going forward. He's wondering what the long-term outlook is for the stock. He's in a profit right now, about 6,000 rupees or thereabouts. The question I will take to you, Rajesh, based on how you're seeing it on the technicals, would you accumulate at this price? What is a good level to start accumulating at?
Post-listing, we have seen that Tata Tech was under, profit-taking mode, and continuously stock was in downtrend. And if we analyze on a weekly chart also, stock was moving in a falling channel. But since last couple of weeks, we have seen there is a reversal, and stock managed to view breakout of this falling channel. Looking at the near-term, short-term structure, there is a sign of reversal on the stock prices, but still 1125 is the immediate supply zone for the stock. If at all stock manages to cross above 1125, then possible up move we can see towards 1200 to 1250 on a positional perspective. So some sign of reversal is there on the stock prices. Stock is now trading about a 20-day, 50-day moving average. So that clearly showing us that near-term structure is showing strength. So I think if he's holding the position, can continue to hold. If he's willing to hold it for some more time, stop loss is now placed at around 1020. And just a disclosure, this stock I am also holding in my personal portfolio.
Tata Tech. All right. The next counter that we're talking about is Isgec. And let's pull that up. We're talking about Isgec Heavy Engineering Limited, which is currently trading at 1,379 or thereabouts. And we've got Jigna, who is writing in from Mumbai and who has bought this at a level of 1,520, is incurring a loss at this juncture and is wondering whether to hold on to this. I will come back to you, Rajesh, on the technicals. Would you hold at this level? Because he's bought at levels of 1,520, slightly elevated.
So Alex, there is an profit taking is happening in this stock, but stock is almost now trading at 50-day moving average support area. Longer term structure is bullish. Some profit taking on the near term structure, but I think if he can give some more time, there is a possibility that stock may again start recovering from the current level. 1340 is the immediate and important support area at this juncture. If it breaks below 1340, then he may look for change the stock. But I think till 1340 is intact, I think he may hold on the position. On the higher side, once his stock crosses above 1430, I think there could be fresh round of buying we may see in this stock, and then 1600 to 1650 would be the next target.
Okay. All right. Harish from Chennai has got this next question. It's an interesting one. I will come to you on this one, Samir. He's talking about BEL, Bharat Electronics, which he's bought at an attractive price of 48 rupees. That's the average buy price. The stock is currently trading at 297 or thereabouts. It's down about 0.7%, but it's gained quite handsomely since Harish bought it. He's holding 1,000 shares. And he's wondering what the prospects are over the next 2 to 3 years. What do you think?
So the business prospects are very good, right? So there's a differentiation in business and whether we should stay invested. So we believe that the business prospects for BEL are quite strong. We believe that they will continue to see good traction in order inflow. They're getting into drones making and all of those kind of products, which the defense industry is going to have a good amount of demand. Apart from that, what they currently are doing also, you see order book is continuously increasing, and because of which the top line and the profitability is increasing, the operating leverages are playing out. But the problem we have with BEL at the current point of time is simply the valuation multiples. Across the board, including BEL, valuations have re-rated quite significantly. The earnings, we don't deny, will come through over the next 2 to 3 years. But you got to realize that we've always said this, that these defense projects are long gestation projects, and the products that they sell also, it's difficult to predict what the profitability for these margins are going to be because they're kind of fixed in price nature. So if raw material prices for them move up, then the profitability can get affected, the operations can get affected. So given that, it's better than most of the others, but it's still a bit on the expensive side. So I would think it makes sense to take some profit right now. If it comes below the 200 level, we would suggest, or closer to the 200, we would suggest getting back into the stock. But at these valuations, we are not comfortable.
Fair point. Valuation certainly a concern for a lot of defense companies, including BEL. Let's talk about Iswar, who's writing in from Nandyal, and he's asking about VMS Industries. This one's for you, Rajesh, and he's asking about a stock that he's bought at levels of 56 rupees a share. He's wondering whether to hold or exit. The current loss stands at as much as 1,700 rupees. Thankfully, it's not 1,700 crore. I'm so used to talking about crores. Rajesh, 1,700 rupees of losses in VMS. Would you hold on?
So the stock is only listed in the BSE. Looking at the chart structure, the stock is struggling to cross 70. That's the major supply zone for the stock on the near-term to short-term perspective. Looking at near-term, short-term structure, I think some corrective move is taken place in this stock, and now stock is trading near to its important support area of 51. That's the immediate support area for the stock. If it's able to hold 51, then some reversal we can see in the near-term basis, and on the high side, 65 is the first major supply zone. If at all stock crosses above 65, then maybe we can see a target towards 74 to 78. But at this juncture, I would suggest to keep a stop loss of 51 if you are holding the position.
All right. Pragya Chakravarti has got the next question. She's writing in from Bangalore, and she's asking about HDFC Bank. And she's asking a question I think that a lot of investors of HDFC Bank have been asking. What is the outlook? Because there has been a lot of talk about the stock, and a lot of people have suggested buying into the stock, but it has not moved up very substantially. In fact, as you can see on the screen, the year so far, it has not really done too much. It's down about 4.5%. It has recovered, of course, from the low point. Samir, the question that she's asking is, she's bought at levels of 1,443, which is actually quite an attractive level. A lot of people were screaming buy at that point. I think you had said the same thing, if I remember correctly. What would you do with this, though?
So we continue to stream buy even at this point. So yes, we were positive on HDFC Bank around 1400, 1500 levels. We continue to remain positive. And I'm not denying the fact that in the near term, you might see some pressure because you see bank deposits are not coming cheap. They're coming expensive, which is leading to some amount of NIM compression. And that NIM compression for some time could probably be something that stays. So we may not see something great happening in the next 6 months. But if somebody has another 2-year horizon, we believe that without the banking industry and especially without the largest private sector player who has probably the access to the cheapest cost of funds, it's going to be difficult for the Indian economy to continue to chug along. And as the demand for funding picks up and as HDFC Bank starts seeing more traction on the loan growth side with higher margins and NIMs start to stabilize and start moving up over 6 months to a year's period, I think the stock will start performing. Valuation comfort is finally there. I mean, HDFC is always one of the stocks that used to trade at 4 times price to book. You're getting it at 2.2 times price to book, which is very attractive on its own historical basis. Even when you compare it to the likes of ICICI and Axis, I think the valuations are now, the differential in the valuations have compressed quite significantly. So I'm not saying that they will expand again drastically to go higher, but given the quality that HDFC persists and the management quality and everything that exists, we believe HDFC will re-rate over time, will see a good uptick. Be patient, hold on to what you have, and if you can on any correction, please add on.
All right, that's the view on HDFC Bank. Torrent Power is the next counter that we're talking about, and this is a question from Thomas George. He's writing in from Cochin in Kerala, and he's bought at levels of 1,700 rupees. He bought in August of this year. He's saying that he can hold for a period of 2 years. What should the targets be? Relatively long-term, Rajesh, and the capability of holding for a long period, what target would you give for a stock that has already gained 80+%?
So stock looking bullish across all time frame. Some profit taking at high level, but still, if you analyze on the long-term chart, stock is clearly moving in upsloping channel on monthly as well as on the yearly chart. That clearly shows that this momentum can extend further. Possible target on the higher side we can see towards 2,400 to 2,500 if he is willing to hold it for next another 2 years. So I think buy on dips is the strategy in this stock until the stock not breaks below 1560 level. I think trend is likely to remain on the bullish side, and possible upside we can see towards 2,400 to 2,500 also.
All right, Prasanna has got this next question, and it is a question for you, Samir, on the target, on the long-term target that you would ascribe to Suzlon Energy. And a lot of people have spoken about the kind of run that it's had, 73 or thereabouts. Even if you don't have a target, would you suggest an entry into this? And if so, what is the kind of duration that you would have to be willing to hold for you to see a substantial upside from this level?
From the current level to see an upside, I think the minimum someone would have to wait would be a 3-year period, right? So I am very, very positive on the business prospects of Suzlon once again. The kind of traction that they're going to get, the kind of order flow that's going to happen over the next couple of years is going to be magnificent. They've been working at about 20 to 30% capacity utilization, which can scale up all the way to 70 to 80 over the next few years as the order inflows come through. And why we believe the order inflows are going to come through is that, look, India requires a huge amount of power capacity to be put up, given the kind of growth we're expecting. And for the first time, we are actually, in peak hours running at a small deficit. And as the requirement for power goes up, the easiest way to put up and quickest way to put up power is the renewable space, be it solar or be it wind. So we believe that Suzlon, with its new higher, the wind turbines that they have that go higher with bigger windspans, will be something that will generate good ROEs and there will be good demand for it. So we continue to remain positive on that front. Again, similar story to what we discussed in the other stock, valuation discomfort. So everyone's already priced in the kind of growth that's going to come to the order book, and that is reflective of the price at the moment. So for this price to be justified, I think it needs the company to work at closer to 60 to 70% utilization, which will take a good 2 to 3 years to happen. So the new capacity that they're putting in will also start trickling in, but that really the benefits of that will start coming maybe 3 years down the line. That's why I'm saying that if you want to make money from the current levels, you've got to wait for 3 years. But if you get corrections closer to the 50, 55 levels, one can add on. Before 50, 55 levels, I'm not recommending a buy. Let me add on. Held the stock, and we have sold some amount of stock at 80, 82 bucks. And we're not looking to add that back to 50, if anything. And if it keeps running up, we'll probably sell the entire lot out because we are uncomfortable with the valuation.
Yeah, that's a fair point, and thanks so much for that clarification, Samir. We've got a question coming in from Ravi Kumar is writing, and he's asking about Natco Pharma, which he's bought at levels of 1,350 rupees per share. It's currently trading above that price, comfortably so, at about 1,500 or thereabouts, 1,540. What should you do about this? Rajesh, would you hold based on what you're seeing on the charts?
Definitely, I think one should hold this Natco Pharma. Overall structure is bullish. Stock is moving in upsloping channel on a monthly chart that clearly shows that sustained buying action is taking place in this stock. This is third consecutive month where stock has formed a higher high-low formation. And whole pharma space is also looking bullish at this juncture. The buying flow is continuously there in most of the pharma stocks. So we believe, yes, Natco Pharma, he can hold on the position. 1470 is the stop loss, and possible upside target for short term is around 1650 to 1700.
Okay, that's the view on Natco Pharma. By the way, we try and take one query per viewer, so do restrict your question to one stock. And the next one is from Darshan, who's writing in from Surat in Gujarat. He's got 20,000 JK Tyre and Apollo Tyre shares. Because it's the same sector, I'm going to take both. He hasn't really given us a buy price okay, apologies. I think he wants to invest 20,000 rupees into both of these counters, and he's wondering whether this is the right price to get in. Samir, how do tyre companies look? And from the pack, would you suggest JK as well as Apollo, or would you pick one of the two?
So if you had to have a pick at the moment, given the valuation front and given the prospects that lie forward, I think JK Cement makes a better buying opportunity than an Apollo Tyre. Though Apollo has a bigger market share and better penetration, we believe that, look, the tyre industry to a large extent is commoditized. They do have branding, but very few people go to the market and say, no, I want the exact same tyre and I want it from this company. What they do look at is what is the pricing for a particular tyre. I mean, what the width is, what the radial is, and all of those kind of in what they compare. JK, I think, can probably capture some amount of market share. Apollo is a great company, also going to do well. We believe the tyre industry for the next many years is going to do well because, let's put it at this, if there's a shift happening in the electric vehicle space, the tyre is one product that is not affected, whether there's a shift in the engine to electric, to CNG, it's agnostic. So as the demand for cars in the country increase, as the replacement demand continues to increase, which is continually happening, the number of cars flying on the road are higher, so the replacements happen more often. We believe the great growth opportunity for the tyre industry is very strong, but valuations across the board, be it MRF, be it Apollo, are very, very expensive. JK is trading at a better valuation. But like I said, it's a smaller player. So it's a question of whether you want to stick with one of the leaders or you want to stick with better valuations. For me, I'd rather have better valuations given where the market is. So I would pick a JK over a Apollo.
Yeah, till the time we come up with flying vehicles, Samir, I would think that the one thing that you would not have to reinvent is the wheel. Let's talk about Zomato. And this next question is coming from Nikhil. He's writing in from Delhi. And he's got Zomato at a level of 267. He's wondering whether he should buy or sell at this juncture. The stock is currently trading at 245. Rajesh, what's the view on the charts?
So this is third consecutive week. Stock is showing some profit taking from recent high. But if you analyze on the short to medium term perspective, still stock is holding the bullish ground, and we believe that 240 is the immediate support area for the stock in this correction. If it's able to hold out 240, I think we may see some pullback action from those level. And in the pullback, if it stocks crosses about 265, then rally can extend to 285, even 300 kind of zone also for Zomato. So if the time horizon is little longer, if he wish to hold it for next 3-4 months, I think he can hold on the position with stop loss of 238.
I'm coming back to you, Rajesh, on this next one. Waaree Renewable Technology is the name of the counter. Lavanya from Tamil Nadu is asking about this. Bought at levels of 1,670. Is it better to hold or would you sell? And she is currently incurring a narrow loss. So she's asking whether to sell at a loss.
You talking about Waaree?
Waaree, yeah.
Okay.
Yeah.
Okay, I think she can hold on the position. Some correction is happening in the stock prices. I think looking at the near-term, short-term structure, 1440 is the immediate and important critical support area for the stock on the downside. If it's not break below 1440, I think some pullback action we can see in the stock, and then possible momentum can extend to 1620. That's the immediate supply zone for the stock. Once the stock crosses above 1620, then further upside target towards 1750, 1800 we could see. Though stock has corrected significantly from its recent high, but after this correction, I think some support buying action has been taken place in the stock from the lower level. The 1440 should be the stop loss to hold the position at this juncture.
Okay. Quick view, Samir, on Motherson Sumi wiring India. We've got a question coming in from Shashank Vedula, who's writing in from Visakhapatnam. He's holding at levels of 68, which is very close to the current market price. He's looking in the next 2 to 3 years. Should he hold on?
So honestly, we don't have detailed coverage on the wiring part of the business, but the other one, Motherson, we do, and we feel valuations have moved up. But this one, I don't have coverage on.
Okay, fair point. I know that it's a spin-off, and therefore I don't know how much data you're going to have, Rajesh, but would you hold on to Motherson wiring?
So data is limited, but looking at the limited data, yes, I think hold the position as stock is almost trading near to the support area of 68, 67. So I think if it's not break below 67, there is a possibility that, stock may attempt to give breakout of its immediate supply zone of 74, 75. And if it's happened, then 82 would be the next target.
Point. Gentlemen, thank you so much for joining in, for answering all the questions that you did. Always a pleasure having you on the program. We're completely out of time. Hopefully the questions that we got answered for you today have benefited you, even if you didn't ask them. We've got lots lined up over the course of the day. Do stay tuned. This is NDTV Profit.
Hello and welcome. This is Hot Money. I'm Agam Vakil, and in this show we take you through all the stocks which are buzzing and have been the flavor of the season. Well, for now, a quick look at how markets are faring, and they are currently at life highs. We have made 25,300 on the Nifty, and it's just short of that at the moment. And the Bank Nifty is also it has given up some of the gains, so it's now marginally in the red. We've seen a little bit of an underperformance when it comes to the broader markets. Let's see if whether or not that still holds, and it does. So the mid cap is down by around 0.4%, and the small cap index is marginally in the red too. Now, overall, if you consider the advance decline ratio, at least in the first couple of hours of trade, it was fairly evenly poised between the two, and it still is, though there has been a widening in terms of the number of advances against declines. So currently at around, I would say about 3 gainers for 4 losers in the current market circumstances. But, moving on, even in terms of the broader markets, if you consider some of your big movers, they will naturally have a big up move for something like a Gujarat Gas. That's up around 9.6%. And besides that, we continue to see strength in a name like Brigade Enterprises. That one is up and about as well. We have gains in Aegis Logistics, Sona BLW, also advances for something like a Chalet Hotel and Pfizer. Those are a handful of names which are in fact doing well. Well, PTM is down around 5%, so that's a little bit problematic too out here. And we're looking at Dixon Tech now wilting under quite a bit of pressure, to be honest. Indus Tower, Granules, Vodafone Idea also, in the red for now, with cuts of anywhere between 3.9 to 4.5%, along with Archean Chemicals and Symphony also looking at some amount of declines coming through. So that's as far as your overall market is concerned. Now, not the most encouraging start to the trading week, save for, of course, that the Nifty is making a new life high. And that said, we're still looking at a lot of writing around 25,500 calls and thereabout. Remember that the range has shifted slightly higher, but we're still continuing to see that kind of pressure coming through. So, besides that, even in terms of sectoral movers, if we can very quickly pull up how and which are those sectors which are actually doing well. So the Nifty IT index continues to advance today, and as is the case for FMCG, and the oil and gas space also is buzzing for now, up around 0.5%. But what's also under pressure is Nifty Auto Index. It does seem like the volumes are just a tad bit disappointing when it comes to the month gone by. But don't forget, we have a very long festive season coming up ahead, and that will in fact start off, end of September and the beginning of October. And from there on, of course, we tend to see a little bit of a climb as far as your auto sales are concerned. Nifty Metals is also down around 0.8%, pardon me. But with that, let's talk about all the stocks that we are going to take up today. And naturally, we're going to talk about Bajaj Finance on the back of, details coming through from its housing finance IPO. Gujarat Gas and GSPL on account of the big restructuring that's coming through. We talk about auto sales as well. Cummins India on the back of a broken note. NHPC and SJVN being given Navratna status, and the whole oil and gas space as well in general, but perhaps specifically upstream companies today. But to talk to us about all these names, we have Sharmila Joshi of sharmilajoshi.com joining us. Sharmila, good afternoon. Thank you so much for joining in. Well, as usual, before I come to you, I'm going to take up the first topic, and that is, of course, the restructuring that is underway when it comes to Gujarat Gas, and GSPL, of course, also looking at an up move today. Let's get in my colleague Mihika to tell us about what's come through over the weekend. Mihika, over to you.
Let's talk about, the scheme of arrangement and focus. Now, first part of it is Gujarat State Petroleum Corporation, Gujarat State Petronet and GSPC Energy will merge into Gujarat Gas, and then the transmission business will be carved out and listed separately. So thereby, two companies have to be resultant. Gujarat Gas will then carry out the city gas distribution business, the gas trading business and exploration and production, while the GSPL transmission business will hand out the transmission side of things. In terms of the share exchange ratio, the merger of JSPC into Gujarat Gas, 10 shares of Gujarat Gas will be issued for every 305 shares held. For GSPL, Gujarat Gas will issue 10 shares for every 13 shares held. And for the demerger of the transmission business, 1 share of the new entity will be given for every 3 shares held in Gujarat Gas. So in total, Gujarat Gas will issue 78.66 crore shares. But out of this, over 53 crore shares will be extinguished because all of these companies have stakes in each other. And the timeline is expected to be completed by July to August of 2025.
Right, Mika, but you've spoken largely about how this restructuring will take place. What can you tell us about valuations going forward?
The valuations are fairly priced. Now, Gujarat State Petronet's company is valued around 26,000 crores, but the core business is only valued at 3,500 crores, and the rest is in investments. For Gujarat State Petroleum, the company is valued around 21,000 crores, and the implied EV to EBITDA multiple is at 6.8 times, which is lower than the industry average, actually. In terms of brokerages, they're fairly mixed. Now, Jefferies, which still maintains an underperform rating, says that the integration of the gas trading businesses will improve Gujarat Gas's margin profile, but it also increases the company for earnings volatility. MK also has a reduced rating on the stock, but they do see value for Gujarat State Petronet shareholders as they see a 5% upside, and they also expect the merger to imply 50% of EPS accretion for Gujarat Gas.
Okay, Meghna, thank you so much for getting us all those details on that upcoming merger and then subsequent demerger there. Sharmila, welcome to the show. What are you making of this whole restructuring exercise, and how would you be placed on any of these stocks going forward?
I think I would be placed positively because I'm taking a very macro view of the situation. I'm not really getting into the nitty-gritty of each and every company and their value, etc. But I think that broadly I'm very positive on gas as a business. I think there is increased, the data that we have seems to show that the shift towards gas is gradual, but it is sort of a steady shift. And apart from vehicles shifting to gas, we also have a lot of industry, especially in the state of Gujarat, which are now increasingly using gas. So that's one bit I'm positive on. And I do think that everything that I've read seems to suggest that the synergies will work better for Gujarat Gas going forward because they are already, I think, the second largest gas trading company. And when they merge these bits with themselves and they remove the transmission business from themselves, I think the structure will be simpler and the synergies will be better. So just going by that, I think, you need to take a slightly longer term view of that. I'm not looking at how it will be immediately, though I think immediately it does seem to suggest that GSPL market seems to think that would is benefiting. But overall, I think it's a good move. And there had been a little bit of bad news for gas as a business, when we had, those kind of claims coming that from the state of Delhi that they will shift their state transport increasingly to electric vehicles, etc. So we had seen gas companies take a bit of a backseat. But I think that going forward, it would be sort of a sector that I would continue to be positive on.
All right. Well, there you have it. That's the view coming in on those set of companies. But from there on, let's talk about, Bajaj Finance. Now, a handful of updates coming here when it comes to Bajaj Finance. First, of course, is, an update when it comes to credit growth. And again, it's not been the best. But it's been a little bit of slowdown, but that's not a key concern at the moment. And it's not like the street is looking at it, with any concern at the moment. Perhaps the bigger update is that we finally now have details of the Bajaj Housing Finance IPO. And for that, we have Harsh, who's joining us to give us more on that one. Harsh, over to you.
Well, so Bajaj Housing Finance, it's a 6,560 crore rupee IPO, of which 3,000 crore is a pure offer for sale by Bajaj Finance itself. So they'll get cash worth 3,000 crore in their books on the back of this IPO. The size of Bajaj Housing is around 97,000 crore in terms of AUM. It's one of the largest in terms of housing finance NBFCs in the country, behind just LIC Housing. There's no other housing financier which is this large. And the growth in this company is what really stands out. 72% is the compounded growth that Bajaj Finance has clocked in terms of its AUM over the last 7 years up to FY24. So you've seen very strong growth that Bajaj Finance has seen on a low base and now on a higher base. Currently, it's growing at 30+%. So 31% growth year on year clocked in Q1 of FY25. That's one thing that really stands out for investors. The other thing is with regard to asset quality. For any lender, very, very critical. Your GNPA ratio is at 0.28%. Your net NPA ratio is 0.1%. The lowest in the industry likely, especially with the kind of size that Bajaj Housing has, and therefore a very interesting play even from that perspective. What will really hold the key will be valuations. Bajaj Finance trades at 5.5 times price to book. The current book value per share of Bajaj Housing Finance is 19 rupees, and therefore if one were to take a correlation of 5 times price to book, you can take a guess as to where the IPO or the IPO price will be. But we'll have to wait and watch for that. Likely an expensive IPO is the expectation at least. And in terms of where Bajaj Finance stands, the current book of Bajaj Finance is at 3.5 lakh crore consolidated. Now with this demerger, it will stand at 2.5 lakh crore. So around 30% of Bajaj Finance's current consolidated book will now get listed separately. Maybe some amount of holding company discount may start to creep into the Bajaj Finance stock as a result of that. Wait and watch, because the Bajaj Finance stock moved 7% in trade last week.
Yeah, fair enough. Interesting, Harsh. Thank you so much for getting us that update on Bajaj Finance, of course, which has had a positive effect for now, at least with respect to that particular impending IPO, which is imminent. But Shamila, your view on the Bajaj Fin twins now, how would you go about them?
Once again, I'm positive on both the stocks, but I think here the only concern that I sometimes have is that the moves in them are very like now you'll suddenly have a 7% up move, you'll have some days of downward move, etc. So if you're a long-term investor, then it's okay, but I think if you're a trader, then you should be cautious. And given the fact that the way Bajaj Finance, for instance, has grown its book, and the fact that